Stop loss order, known as SL. A stop loss order is one of the most important orders in the Forex market because it allows you to limit the amount of losses while trading. It is a type of order that is linked to any trade you take, okay, if you put it, for the purpose of preventing unexpected and additional losses if the market goes against you. So note, it is for preventing unexpected additional losses, not to stop you from losing, but to prevent additional losses in the market. So whenever you take a trade, it is best to put a stop loss order such that if the market goes against you at a certain level, the trade will stop and you won't lose extra money. Okay, so note, a stop loss order does not prevent you from losing money. It prevents you from losing more money than you had expected to lose while entering a trade. Okay, so note that it prevents you from losing additional expected money while entering a trade. For example, if Euro USD is trading at 1.1550 level and you go long, basically you buy, you can set a stop loss order at 1.1500 level, so just about 50 pips below the current market price. This means that if the market goes 50 pips against you, so you wanted it to go up, but instead the market is going down, and it goes down 50 pips against you, you will counter a 50 pip loss and you will trade, and your trade will automatically be stopped at 1.150 level. So basically your market will stop here, so you lose only those 50 pips. If market continues going lower below this level, then the trade will have already taken you out and you'll be sitting out with that loss. So you won't lose additional money. You'll only lose that set stop loss amount that you had set while entering the trade. For example, I think this is the same slide. Let's move on to the next one. We will dive deeper into stop losses and how to properly use them under the risk management section. Without proper risk management in your trading arsenal, you will end up losing all your money over and over, just like some of us have. I'm sure most of you have lost money because you did not understand what stop loss is, and deep down you did not understand risk management. Okay, but we are here to teach you how not to blow your account, and if you use proper stop loss orders and proper risk management, trust me, my friend, you will take a long time before you blow any account, or better off, you will never blow any account if you use the proper risk management. Trailing stop loss. This is a type of stop loss order that is attached to your trade that moves as prices fluctuate either up or down. So if you take a trade and the market is moving in your direction, there's a trailing stop loss if you put it. For example, let's say you short Euro JPY at 130.50 level with a trailing stop loss of 50 pips. This means that originally your stop loss is at 131.00, so 50 pips above this. Remember, you've entered a short position, you want it to move down, so you'll set your stop loss at a level higher than 130.50 level. Okay, if the price goes down in your favor and hits 130 level, okay, your trailing stop loss will move down 50 pips. So it's moving together with your trading account. So if the market moves 50 pips down and you had kept a 50 pip trailing stop loss, market will move in line with that to the 130.50 level where your original entry was. This will help you break even on the market if the market moves back against you. Okay, so the market trailing stop loss helps you just to move your stop loss as well when the market is moving. Note, the trailing stop loss never goes back to its original price that you had once set. So if market starts moving back against you up, the trailing stop loss won't move up with it. It will move together as the market is going towards your favor. If you break even, as you've heard I've said, if the market goes against you once your trailing stop loss had already moved and you come out at break even, what it means is that if the market moves against you back to the original entry, which is 130.50, your stop loss will be hit and you'll have neither lost or gained any money. Okay, so this is a risk management strategy which can help you enter a trade and come out with either no loss or no winner. This is basically known as break even. Trailing stop can also help you lock in profit. This means if the market moves down another 50 pips, okay, to 129.50, remember market is falling down and you had entered a sell position, your trailing stop loss will move down another 50 pips to the 130.0 level. If at this point the market moves against you back to the 130 level, so market was going towards your direction and then it starts moving back against you, your stop loss will be hit, but you would have locked in profit of 50 pips. Okay, so note that it's helped you lock in profit such that when market has gone against you, you'll come out with a 50 pip profit. So that's the lock-in profit and the break even. Take profit order, better known as TP. A take profit order is an order linked to a trade for the purpose of locking in on your profit once the market reaches a certain level in your favor. As you can already tell, this is the opposite of a stop loss order. So a stop loss order helps you not to lose additional losses, but a take profit order is an order you put linked with your trade that helps you come out of the market when the market reaches your expected target level. For example, if you go long on Euro USD, meaning you buy at 1.1600 level and you anticipate the market to reach the 1.170 level, which is 100 pips move, okay? So if the market moves in your favor, you can set a take profit at that level. When the market gets to this point, your trade will automatically close and you will get 100 pip profit. So just like the stop loss, this one is opposite such that it helps you take your profit out of the market, okay? So I think we end there for the market orders. That's where we end, and I hope you've enjoyed that lesson, and I'll see you in the next lesson. Hello traders, you have just completed the basics of Forex trading. To advance your trading career, you need to learn advanced technical analysis, risk management, and the psychology of trading. So buy our legendary advanced course and develop these trading skills. As a legendary student, you will get one-on-one access to our mentors, a copy of our course book, over 30 hours of trading content, and you'll get funding of $1,200 to kickstart your trading career. So click the links below to begin.